Okay. Hi, Shravani. So today we discuss some questions. Okay. So first question is an individual received $50,000 during the current year pursuant to a divorce decree executed in 2015. A check for $25,000 was identified as annual alimony, check totaling $10,000 as manual child support, and a check for $15,000 as a property settlement. So, what amount should we include in an individual's gross income? So, out of 50,000, 25,000 is a alimony, 10,000 is a child support, and $15,000 is a property settlement. So, what should we include in gross income? So it is related to divorce settlement. $25,000 is received as alimony, $10,000 is child support, and $15,000 is for property settlement. Okay. So any idea which option should be correct here? $50,000 is received during divorce settlement. Out of this 50,000, $25,000 is a alimony, 10,000 is child support, and $15,000 is for a property settlement. And divorce year is 2015. So what should be the right answer?
Option D, 25,000.
Yes, correct. So since child support and property settlement is not included in gross income, for alimony, we need to check the year of divorce since it is executed in 2015. So before 2018, the income alimony is included in the gross income. So we will include this alimony in an individual's gross income. So correct answer should be $25,000. Next question. Which of the following should be included when determining adjusted gross income? So, when you calculate the adjusted gross income, which should be included? Compensation for injuries or sickness, tuition scholarships, alimony received pursuant to divorce decree executed in 2014, or rental value of personages.
Option A,
And Shravani? So compensation, if you are receiving any compensation that is for a physical injury or sickness, it is not included in your gross income, means it is tax exempted. So answer number is not correct.
then it's option D. B and C is also
Uh, no. Since parsonages means ki, like if a priest is living in a church, so rental value of his accommodation will be a income for him. The answer is no. So option D is also not correct. Tuition scholarship. Tuition scholarship, since the scholarship is tax exempted unless it is received as a compensation for any services. So it is also the wrong answer. Alimony received is a taxable income if it is before 2018. Since 20, it is executed in 2014, that means it is a taxable income. So right answer should be C. Any doubt in this question? Any doubt?
No.
Okay. Next question. During the current year, Adler had following cash receipt. So these are some cash receipt received by Adler. Wages for $18,000, interest income from investment in municipal bond $400, and unemployment compensation $3,900. So which income is taxable or included in gross income? Okay, Dhanashri, wages should be taxable or not?
It is taxable. Interest is also taxable.
Okay, wages should be taxable. Next, interest income from investment in municipal bond. Shravani, it is taxable or tax exempt item? Shravani, it is taxable or tax exempt item? Interest income from investment in municipal bond. Anyone, if you know, if you are getting any interest income from municipal bond, is it taxable or tax exempt?
Ma'am, exempted.
Yes, correct. So if you are receiving the interest from municipal bond, state or local bond, then it is not taxable. So that means it will be not included in your gross income. Next, unemployment compensation. Unemployment compensation is taxable or tax exempt? Unemployment compensation is taxable or not?
Ma'am, non-taxable.
Yes. So wages and uh, what did you say? Non-taxable.
It's a taxable.
Yes, taxable. So wages and unemployment compensation, these two items are taxable and included in the gross income. But interest income is not taxable. So correct answer should be $18,000 plus $3,900. It will gives you $21,900 is the correct answer. Okay, any doubt?
No.
Okay, next question. A taxpayer received $200 in interest from US Treasury bond and $300 in interest from municipal bond. So what amount of interest should be included in taxpayer gross income? So these two interests are taxable. Both are tax exempt, or any one of these is taxable, or other is
US
exempt.
US Treasury bond is taxable and municipal bond is exempt.
Okay, what about others? US Treasury bonds are taxable or not? This is an important question. So US Treasury bond are taxable or not?
Ma'am, taxable?
Yes. And municipal bond?
Non-taxable.
Yes, correct. So right answer will be $200. Next question. A grandparent gave her only granddaughter a gift of $25,000. So what amount, if any, should the granddaughter report as income on her tax return? So if you are receiving a gift or anything in inheritance, so it is taxable or not?
Non-taxable.
Yes, correct. It is non-taxable. So you not need to include any amount in the gross income. So correct answer will be option number B. Okay, any doubt in this question? Next is again related to divorce settlement. So which of the following should be taxable as gross income? Alimony received based on divorce agreement executed in 2015. Child support received in 2015. Child support received in 2019. Alimony received based on a divorce agreement executed in 2019. So which should be included as taxable income?
Option A.
Yes. What about others? Any doubt in other questions? Other option? Okay, so correct answer is A. Since after 2019, any kind of alimony is not taxable and child support is not taxable. So correct answer should be alimony received based on a divorce agreement executed in 2015, because it is before 2018. Next is Sanderson has made deductible contribution to the traditional IRA for many years. He recently retired at the age of 60 and received a distribution of $150,000, in which, if any, will the distribution be taxed? So if you are getting any distribution from traditional IRA, then how this distribution be taxed? First of all, you need to check the type of IRA. So it is a traditional IRA, and he has made a deductible contribution, means when he contribute to this IRA, he got the deduction for the contribution. And now he is getting the distribution and his age is 60 years. So how is this income will be taxed? First of all, it will not be taxed. So if you are getting any distribution from a traditional IRA for whom you get the deductible contribution, so if the distribution will be taxable or not, first of all, अगर आपको पहले बेनिफिट मिला हुआ है आपको डिडक्शन मिली हुई है, that means if you are getting the distribution now, then it will be taxable or not?
Taxable.
Yes, it will be taxable. And now that means option A is incorrect. Next, out of these options, so if you are getting the distribution, will it be a capital gain for you? Will it subject to 10% penalty, or will it be a ordinary income?
Option D.
Ordinary income. So what about 10% penalty? Oh, okay. So if you withdraw your from your IRA before the age of 59 and half years and using for any non-qualified purpose, then it will subject to 10% penalty tax. Since you are retired at age 60, means you are uh, fulfilling the criteria, that means there will be not a penalty. And any distribution you get got from IRA, it will be included in your gross income and taxable as the ordinary income. Reported in your form 1040 directly, not in any schedule. So clear? Any doubt in this question?
No.
Okay, next question. There, an employee of Source C Corporation is not a shareholder. Which of the following would be included in their taxable gross income? So he is an employee of Source C Corporation, is not a shareholder. He is an employee but not a shareholder. So what should be included in his taxable gross income? $10,000 gift from taxpayer's grandparent. So if you are getting any gift, will it be taxable or included in gross income? Next is,
Option B.
if you are getting any dividend income on shares of stock that the taxpayer received for services rendered, means you are you have given this you are receiving the shares as a compensation or the fair market value of land that the taxpayer inherited from an uncle. Employer provided medical insurance coverage under a health plan. So correct answer should be option number B. Okay, since gift and inheritance are non-taxable items, employer provided medical insurance coverage. It is non-taxable. Fringe benefit, it means the option number B is correct. So if you are getting any shares for the services rendered and you are getting any dividend income on the shares, so it will be a taxable income for you. Okay, next question. A taxpayer received a parcel of land valued at $20,000 in exchange for performing services at $20,000 for another individual. You are getting a piece of land in exchange for your services at $20,000. So land is of $20,000 value and you are performing the services also for the same amount. What is the tax consequence, if any, the taxpayer receipt of the land? So what should be the tax treatment for this transaction? So will it be a non-taxable effect? it will be included in your gross income, portfolio income, or capital gain income. You are receiving a land, a property in exchange for the services. Okay, please answer. Even if it is wrong, then there will be not any marks given or any kind of punishment given. So please answer. If you are getting a land in exchange for the services, so will it be a taxable or not? If yes, then how is it be included as ordinary income, portfolio, or a capital gain? Okay, if you are receiving a property in exchange for services, that means it is a kind of compensation for you and it will be taxable. And how? It will be included in your gross income as a ordinary income. This is not a capital gain property because you are not selling this property, you are receiving in exchange for your services. This is not an investment, so it will be included in your ordinary income and taxable. Next, Faulkner received the following interest payment. So these are certain kind of interest payment he is receiving from municipal bond, $500, from treasury bond, $1,000, interest on state tax refund, $300, corporate bond, $800. So what amount is taxable interest? So out of these bond, interest from which is taxable?
US Treasury bond.
US treasury bond is taxable. Okay. Municipal bond is taxable or not?
Is exempt.
Okay. Interest on state tax refund. So if you are getting any tax refund, interest on tax refund means ki if you are getting the refund, late payment of refund, and they are giving you certain kind of interest on this refund. So will it be a taxable or not? It will be taxable also. So if you are getting any interest on refund of state taxes or federal taxes, then it will be a taxable income for you. Next, corporate bonds. So what about corporate bond? Is it taxable or tax exempt?
Taxable.
Yes, taxable. So these three will be taxable. If you add these, you will get the answer, $2,100. Okay. Any doubt? Any doubt
No.
in these questions?
No.
Okay. So next is again, this is a kind of interest and dividend payment Danny received. So you need to calculate what should be included in gross income. So first is City of Atlanta bond interest, US Treasury bond interest, City of Georgia bond interest, sorry, State of Alice Company stock common dividend, Draw Corporation bond interest. So city bond interest. City means it is kind of local government bond. So will it be a taxable or not?
Exempt.
Yes. US Treasury bond interest.
Taxable.
Yes. Again, state of Georgia bond interest. State bond. So
Taxable.
any local and state government bond is tax exempted. Please remember any local or state government bond are tax exempted. So these two will not be taxable. US Treasury bond will be taxable. Next, Ellis company common stock dividend. So if you are getting any stock dividend, will it be taxable or not?
Taxable. Oh,
Okay. Raw corporation bond interest. So if you are getting a corporation bond and receiving certain kind of interest on these bonds, so will it be taxable or not? Corporation bonds are taxable or not?
taxable.
Taxable.
Yes, taxable. So correct answer should be 500 plus 400 plus $600. So it will give you $1,500 is the correct answer. Okay, next question. In the current year, Jensen had the following items. So you need to tell what is the Jensen adjusted gross income. So first of all, his salary $50,000. Next, inheritance $25,000. Alimony from ex-spouse divorce agreement finalized in 2015 $12,000. Child support from ex-spouse $9,000. So which should be included in your gross income or adjusted gross income? Salary is taxable or not?
Taxable.
Inheritance,
Not taxable.
yes. Alimony, look at the
Taxable.
year, it is before 2015.
Taxable.
Yes. Child support, child support is non-taxable. So out of these four items, your salary is taxable and alimony will be taxable. So correct answer should be correct answer should be 50,000 plus $12,000. It will give you $62,000. Correct answer. Okay. Is it clear?
Yes.
Yes, ma'am.
Okay. Next question is Anya received $400 state income tax refund. So $400 is the
Ja,
tax.
ja.
Next, Anya deducted $1,000 of state income tax paid in prior year as a part of her itemized deduction. So she got the $1,000 benefit during the prior year and now getting $400 as a refund this year. So which of the following statement regarding the taxability of Anya's refund is true? So you need to tell about this refund, whether it will be taxable this year or not. She deducted $1,000 as a state income tax in prior year as a part of itemized deduction.
Taxable.
Yes, taxable. Okay, so if a person if a person has made itemized deduction in the prior year, then any refund in the current year is taxable up to the amount of the benefit he got in the prior year. So जितना आपको prior year में benefit मिला है, up to that benefit it will be taxable if you are getting any refund. So she made the deduction of $1,000 last year and now getting $400 as a state income tax refund. So it will be taxable. So it means option D is incorrect. Now from A, B, C, what should be the right answer? $400 is taxable if she claims standard deduction or itemized deduction in prior year. First of all, please figure out if she made standard or itemized, when it will be taxable.
Itemized.
Yes, itemized. That means option A is also incorrect. Now from option B and C. A person takes itemized deduction if it $400 is taxable if itemized deduction in prior year exceeded the standard deduction by $100, or if the $400 is taxable if itemized deduction in prior year exceeded the standard deduction by $400. So which should be correct? B or C?
Option C.
Yes, option C. Why option C? Look, since the 400 will be taxable only if this tax refund has this tax deduction has provided benefit in the prior year. Now it will be taxable only if your itemized deduction is exceeding the standard deduction by $400. If it is increased by $100 only, means it provided you the $100 benefit only in the prior year. Now you can't uh, you need not need to pay the taxes on the whole amount if you are getting any benefit only for the $100 in the prior year. So if if there is $100 here, then it will be correct. But since they are asking that $400 is taxable, so $400 is only taxable if the whole $400 is providing you the benefit in the prior year. Means your itemized deduction should be greater than the standard deduction by $400. So any doubt in this question?
No.
Next question. Jasmine purchased $100 share of Pinkstay Corporation, public traded company on January 1 of year 1 of for $5,000. The fair market value of the share at the end of year was $6,000. On January 1, year 4, Pinkstay Corporation declared a 2-for-1 stock split when the fair market was $65. per share. On January 1 of year 5, Jasmine sold all the Pinkstay Corporation stock when the fair market value was $40 per share. Which of the following should be true? So she purchased 100 share for $5,000. The fair market value of share at the year end was $6,000. Next, January 1 year 4, there will be a stock split happen when the fair market value was $65. Next, January 1, she sold all these stock when the fair market value was $40. So which of the following statement should be correct? Say, please look at the options carefully. All the statements are given for year 4. So that means year 5 transaction is irrelevant in this case. You need to only check for these lines because year 5 scenario is not given in your options. So please check if there is any taxable transaction is happening in year 4 or not. Look, she is purchasing the shares in year 1. So it is also irrelevant. For year 4, the only transaction is happening that a stock split 2 for 1 happened on January 1. So what do you think? Stock split is a taxable event or not? Look, she is purchasing 100 share and then stock split was happened. That means at the end of year 4, she has 200 shares because 2 for 1 stock split happened. So that means option 1 is incorrect because it is saying that she has 100 share at the end of year 4. Have you got my point?
Yes, ma'am.
Okay. Next, Jasmine basis in the Pinkstay Corporation stock at the end of year 4 is $65 per share. Uh, at the end of year 4, what should be the stock basis in each stock? Uh, since stock split happened, that means the value of share got decreased because the number of shares got increased. So it will not be $65 per share. It should be less than $65. So option B is also incorrect. Next, there is not taxable income for Pinkstay Corporation in year 4. So in year 4, stock split is happening. So you need to check if the stock split is taxable event or not. Option D is asking for taxable event. So please tell if whether the stock split is a taxable event or not.
Non-taxable.
Yes, stock split is non-taxable event. So it means there will be a not taxable income for Pinkstay Corporation in year 4. Any other transaction is not happening in year 4. Only the stock split is happening according to this question. So right answer will be C because stock split is not a taxable income. So it will be not included in the gross income. Next question is, which of the following statement is true regarding taxation of social security benefit? So social security benefit, how is it taxable? So if the income is $10,000, then 50% is taxable, 50% is maximum amount, 85% is maximum amount, or if the gross income is $10,000 of social security benefit, then 85% dollar will be taxable. So which option should be correct? So I discussed this social security benefit in one of the class. So what about social security benefits? How is it taxable? I explained you that if the we calculate the provisional income for the taxpayer. If the provisional income is less than $25,000, then it social security benefits are non-taxable, 0% taxable. And if it is in between 25 to $34,000, then it will be 50% taxable. And if it is more than $34,000, then it will be 85% taxable. So which should be the correct answer in this case?
Yeah, is the correct answer, ma'am.
Which?
Option C.
And other one? Okay. So if this taxpayer only source of income is $10,000, then 50% of benefits are taxable. Is it correct or wrong? So I need to complete these questions. Please respond.
Incorrect.
Yes, because if it is up to $25,000, then it will be non-taxable for the taxpayer. But if the taxpayer provisional income is in between 25 to $34,000, then it will be 50% taxable. And if it is more than $34,000, then 85% of the benefits are taxable. So 50% is maximum amount? No. 85% is the maximum amount. So option C should be correct. Why not option D? It is saying that if it is 10,000, then 85% is taxable. It is wrong because up to $25,000 of provisional income, it is non-taxable. Okay, any doubt in this question?
No.
Okay, next question is, Linda is an employee of JRH Corporation. Which of the following would be included in gross income? So she is an employee and you need to tell which should be included in gross income. Trip given by Linda for meeting sale goals. So any business kind of trip. Premium paid by JRH Corporation for a group term life insurance up to a $50,000 of coverage. 2,500 paid by JRH Corporation for an annual parking pass. $1,000 tuition paid by JRH Corporation to State University for Linda's master degree program. So which should be taxable? Any business trip, any premium, On lifetime insurance policy, any annual parking pass or tuition fees paid by corporation. Uh, s- Sorry, option A is not business travel. It is a trip given to Linda for meeting sale goals. Means she's getting a trip kind of benefit because she has performed well. Kind of award. So which should be taxable out of these four?
Option A. Option A.
Okay. And other? Yes, option A will be correct answer because she is getting an award and that trip in the form of award is included in the gross income. Next, because lifetime insurance policy is up to $50,000, it is tax exempt. $2,500 paid for annual parking pass. This is also exempted because there is limit for annual for parking pass, which is I think it was $325 per month. So it is given for the annual parking pass. So you need to calculate 325 into 12 months. So it will give you around $39 annual limit. So since it is less than the threshold, so it will be non-taxable. Next, $1,000 of tuition paid by JRH Corporation. So any kind of education expenses bear by your corporation, your company, it will be non-taxable but subject to a limit. So since $1,000 is within the limit, that is why it is non-taxable. So the correct answer should be A. Next is 60-year-old taxpayer established an Roth IRA 6 years ago. So it is a Roth IRA and established 6 years ago. The taxpayer contribution totaled $12,000 and the plan has a current balance of $15,000. So the taxpayer withdraw $5,000 from the plan. What amount of the withdrawal is taxable? So it is from IRA and please, first of all, please tell if you know the calculation part of IRA, like how is the distribution is taxable. Otherwise, I will skip this because I need to explain it in the class if you don't know about the calculation part of IRA.
We can do it tomorrow.
Okay. Next question. Okay, again, this is from state income tax refund. So, Kuristi received a $800 refund and she deducted $3,000 of taxes paid in prior year as a part of her itemized deduction. So, which of the following is true? She got refund of $800 and has taken the deduction of $3,000 in the prior year as an itemized deduction. So, what about the taxability part of this refund?
Option A.
And other, uh, Ganan, big guy. Sorry, I am not able to pronounce your name. So, which should be the correct answer according to you?
C, ma'am.
Acha, what's your name actually? How is it pronounced?
Nyanambige.
Okay. Okay. You are from South.
Yes, ma'am.
Okay. Okay, देखो. She's if she is getting an itemized deduction exceed the standard deduction by $200 means if she got the benefit of $200 last year, then how can $800 is taxable? For those who are asking, option A. If the benefit was $200, then why is $800 is taxable? Look, standard deduction is the deduction that any taxpayer can get. So, if the itemized deduction are greater than the standard deduction, then only a taxpayer choose itemized deductions. So, if the itemized deduction is greater than standard deduction by $200, that means the taxpayer got the benefit of $200 in the prior year. So, up to the benefit, refund should be taxable now. So that means out of $800, only $200 should be the taxable amount. So option B should be correct, not option A. So any doubt, why not A and B? Any doubt?
No, ma'am.
So taxable part will be depend upon how much the benefit you got in the prior year. If you have taken the standard deduction, that means there is not that means your refund is not taxable this year. But if you got the benefit in itemized deduction, then only the refund is taxable in the current year and the amount will be depend upon the prior year benefit. So up to the amount of benefit, it will be taxable in the current year. Okay, next question is Bill and Jane Jones were divorced on January 1.
Garim, 1 second. Garima, I have a hard stop. For tomorrow, can we do the class in the morning? Because in the evening I'll be on the flight, so won't be available. So if and everyone convinced, then we can have some other timing.
Okay, what at what time?
Uh, in the morning, anytime before 12 o'clock will do.
Okay, I
Or otherwise, then I have to skip the class. You may continue then. I will take a
no,
long note from.
I have no problem in taking morning class. So if other other student will agree, then we can keep the class in the morning.
Timing, ma'am.
Uh,
Timing
10 to 11 will do.
9:30 to 10:30.
That is fine with me. 9:30 to 10.
Okay. Okay, then I will drop a message in the group.
Okay. Okay. Done. Done.
Yes.
Yep. Thank you.
Okay. Okay. So ठीक है, I will discuss these two question in next.
Balance. Yeah.
Okay.
Yeah. Or otherwise you can continue, Garima. No issues.
Okay, okay. No
Yeah.
issue. We will discuss this in next class, and I will message in the group if others agree. Then we will keep a class at 9:30 tomorrow.
To 10:30. Okay. Done then. Thank you. Thank you. Bye bye.
Okay. Thank you. Bye.
Thank you, ma'am.